welcome, and judging from the crowds, this will be a very interesting session, and I'll be counting on all of you also for some questions towards the end. Welcome to our session on sustainable and financial utility in digital asset systems. I'm Anna Tunkal. I'm the head of strategic partnerships and global engagement at APCO Worldwide. We're one of the world's largest independent, majority women-owned advisory firms that sits at the intersection of public affairs, strategic communications, and I lead our work on partnerships and global engagement. We're very proud partners and supporters of the GBBC, and it's a real pleasure to be here. I'll be the moderator for today's discussion, and just wanted to set the scene a little bit before I move to this illustrious panel of experts. And so over the past several years, we've seen cryptocurrency and blockchain technology rise naturally in popularity and its use. And the topic has dominated conversations about the future of finance and what it means for the global financial system. It also has the potential to change the financial system as we know it and make it increasingly more interconnected, even more so than it is today. We have also seen a lot of hype in recent news that I don't need to tell you about, and some are calling the come of the crypto winter and questioning whether crypto is a trend that will eventually disappear. Again, judging by the number you hear, I think most of you will probably disagree with that. Today, I wanted to center our discussion actually at a slightly higher level and talk about not some of those stories that are here to stay, some are here to go, but real-world utility of digital financial tools. And more importantly, also how they can be leveraged to promote global sustainable development. So in terms of, I guess, my overarching framing and a topic that is also near and dear to my heart is the notion of multi-stakeholder partnerships. And I think to me, decentralized financial assets really could be the puzzle that unlocks further collaboration between public sector, private sector, multilateral organizations, and NGOs. So, without further ado, I wanted to introduce my panel. We're joined by Bryony Widdop, who's a partner at Hogan Lovells. Here, we have Joran Lambert, you guys switched, but Chief Digital Officer from MasterCard. We have Thomas Pushman, the Executive Director from the Global Center of Sustainable Digital Finance and Managing Director of Swiss Tech Innovation Lab. And our host for this evening as well, Brooks Enstwedel, Senior Vice President and Head of Customer Success at Ripple. So I wanted to start with a macro framing question. Each of you represent a different organizational set, different sector, and I wanted you to talk about what sustainability means to you from where you sit, whether in traditional financial systems or sort of the new world of crypto and decentralized financial assets. So Brian, I would love to start with you.
Okay, thanks very much, Anna. Okay, so I guess, traditional definition of sustainability, this idea that you meet present needs without compromising the ability of future generations to meet their needs. But and that's useful, and it gives you that kind of future framing perspective that we're looking at when we talk about what is sustainability. But I think in the financial services provision, in the financial sector, you've got to look at three interconnected aspects for what sustainability means in a financial system. So first of all, internal to that financial system itself, the present operation and future resilient operation of that financial system. So kind of the economic interaction and behavior that supports the resilience of the system and the ongoing operation. So, activities, for example, that prevent market manipulation, fraud, etc., in the system itself. So that's one aspect. The second aspect is a real-world impact of the means. So finance is a means to an end. We use finance to obviously achieve outcomes. But in delivering on the means of that, you've got to look at the real-world impact that financial system has, and is that sustainable? This particularly comes through when you look at things like delivering, value transmission via Bitcoin systems, and we've had a lot of discussion around energy usage in that context. So the means of the financial system, is that sustainable? And then finally, the ends. What are the ends? So what is the finance achieving? There's sustainability questions around how that finance is being applied, You know, and in that, obviously, we're getting into things like, are we achieving sustainable impact, sustainable development goals, those types of questions in the real world. So I think it's those three things, and they're interconnected and they loop back into each other as you move through them and then back round.
I love the means and ends focus. I think it's a really good way to frame this. Joran, I wanted to come to you from what does this mean from a MasterCard standpoint, so sustainability and financial systems?
Yeah, so as I hear the question, is it, you hear me?
Yeah.
As I hear the question, sustainability means many things to many people. When you walk the promenade, it's all about ESG type of sustainability.
Mm-hmm.
I think what Bryony referred to was actually a more profound, is it actually, can it sustain itself? Right, that might be better. Can it actually sustain itself? And so we all, as you all know, operate a very large global payment processing system, which processes something like 140 billion transactions per year. And we think of the primary needs of a payment system, just like the primary needs of humans are food, shelter, and clothing of a payment system. It's resilience, and you refer to that. It needs to actually be up all the time. Otherwise, people can't make a livelihood. It is compliance with law and regulation at all times. It is the ability to offer consumer protections. And it is cybersecurity, because if bad actors go after it, it needs to actually sustain itself, right? That is fundamental. And honestly, the digital assets community has not really lived up to the basic primary needs. If you then talk about sustainability as climate impact, there is a reasonable hypothesis that proof of stake systems can be highly energy efficient. Proof of work, not at all. But it's a hypothesis, right? Nobody has actually tried to run a system of 140 billion transactions on a proof of stake system and proven that actually it runs without performance, without resiliency, but also without energy efficiency. But the promise is there, and so I think it would be foolish to dismiss it. What is more interesting, I think, is the utility. What is the use case? Mm-hmm. We all know that trading has been 95% of all the activity, but trading is not that interesting, right? I mean, people have been trading for the longest time, but what is the utility? What is the use case that it will bring that will truly unlock the value of it? And that's I think what we're all working towards. I'm a believer that utility is there, but we have yet to prove that and do so in a sustainable way.
Thank you for that. And I would like us to kind of go back and forth a little bit about the deeper definition of sustainability for the system and the business, and also the broader, deeper meaning in terms of what the sustainability approach can unlock from societal impact standpoint. Thomas, I wanted to go to you. What's your definition from, a mix of an academic and innovator perspective?
Yeah. I think we have to look at it from a more comprehensive perspective. So what we observed over the past years when we looked at it was that how can the financial system as a whole improve sustainability in a comprehensive way, meaning how can it have a positive impact on the 17 sustainable development goals. So that's not only climate, but that's more. That's the ocean, that's health, that's everything. That's food. We talked about this. So I think this comprehensive view is somehow important. And if you look at it from an historical perspective, we approached it from, if you look at sustainable finance 1.0, this was very much about avoiding to invest in firms that use child labor or things like that. Then came Sustainable Finance 2.0, where we all now are talking about more climate finance things and stuff like that. And I think 3.0 is just ahead of us, where we will see solutions emerging that really, where the companies and especially the financial institutions will have as the SDGs at really the heart of their business model, and I think this is the most fundamental change we are seeing now. So having said that, I think the best is still ahead of us.
That's great. So, Brooks, wanted to come to you because I think to me it's really interesting because Ripple represents both sort of the deeper definition of sustainability when it comes to use cases and what you've been piloting in terms of energy efficiency, and also in your model in creating those partnership ecosystems across so many of your customers. I'm sure you're advancing sustainable approach in a deeper way. So, curious for your take.
Great, thank you, Anna, and thank you to the GBBC for putting this together and the convening. It's excellent space, and certainly at a time right now at Davos, these sorts of conversations, kind of deep conversations, getting to the heart of the issue are important. So I like this framework of thinking about the core business and what we're actually going after from a business front, and then how we do it. And that could apply to anyone thinking about sustainability. And so Ripple was set up 10 years ago to be the company to find real-world use cases for the XRP Ledger and XRP, the digital asset. Separate company from the ledger and the asset, of course. And we really identified very early on that cross-border payments and moving value across borders was where we wanted to play and go after. And we've been doing that for 10 years. It takes time, and it's taken a lot of effort to build a network now over 70 countries. But the underlying goal hasn't changed in the beginning, and our employees love this, our stakeholders love it, and it's all about moving value in a faster, cheaper, more trustworthy, and now greener way across borders. And using blockchain technology initially, and then also adding on digital assets as the bridge currency more frequently and more recently. And so that is really what's driven our core business at Ripple, Ripple Nets. But we also really view, and I like the way that all the panelists have talked about it, there is the macro, and then there's kind of the underlier, if you will. Mm-hmm. And the underlier for Ripple is that we did start out with a ledger that was carbon neutral. We did start out with a vision from the founders that in the environment was going to be very important to what we were doing. And we've lived that for the last 10 years of doing things like signing the Crypto Climate Accord, and we'll talk about later in the panel, kind of going after the carbon credit market and getting a creator fund around that. And so I think that to me is this balance that you laid out, is the business model and then how you're doing it together have to be in concert and not be at odds with each other.
Thanks for that broader framing. Sierra, I wanted to come to you. You obviously, as the Chief Digital Officer for MasterCard, I mean, you've been pioneer in digital financial payments of all sorts. And given MasterCard's global footprint and business in mind, how would you characterize this digital asset revolution in terms of the impact that you're feeling and how you're enabling this also for your customers?
Yeah. I'm not sure I would
Or would you call it a digital assets revolution, maybe?
I'm not sure I would call it a revolution. And having been in the industry for a long time, we don't do revolution that well. we more evolve. We do evolution, and I think we do evolution really quite well. And a good example is some of you may use Apple Pay or Google Pay or Samsung Pay. But what's in that phone is exactly the same technology and credential that it sits on the chip on your card. And if you tap your phone against a terminal, that same terminal will be able to backward compatible with the chip that exists for 20 years or the card tap, and actually even backward compatible with the max swipe that exists for 50 years. So actually backward compatibility and evolution to bring along the consumers with you is quite important. Now, if you then think about digital assets, well, there is a bit of a break because it's a very different mindset, a very different thinking. Bringing change about is possible, but once again, it needs to come with a real, tangible, value-added use case. I repeat myself, I don't think trading is that. I think it's interesting. People want to make a buck. I completely get it, but it's not disruptive as a use case. What Brooks mentions, improving cross-border payments, is actually a real need and a real opportunity and a real use case where digital assets could provide solutions. Programmability and eliminative counterparty risk is a huge opportunity, I think. And so I do believe the case is absolutely there, but we need to come back to what is really needed. And right now there's a real trust deficiency into that system, which essentially means that it will be very hard right now to bring the financial ecosystem along. And so we need to actually fix that. We need to fix the trust in the underlying asset. We need to fix the trust in the counterparty and fix identity on public blockchain. And we need to provide the right consumer protections and the user experience that comes with it. So it's a lot of work to be done. I still, despite any crypto winter, which has all to do with non-blockchain related practices, by the way, and it's all to do with the trading use case, which frankly is not so interesting, the base case is still there, absolutely. But we have a little bit of work to do to kind of bring back that trust and bring back that value-added use case.
So Brian, actually on that point, I wanted to go to you because I'm assuming that from where you sit at Hawkins Levels, you get to do a lot of the trust building, fixing, and then before trust is broken. So how do you build safeguards that help protect against fraud, that help protect the ecosystem, and if there are any examples that you could share with us, that would be even great.
Yeah, sure. I think on this question, we end up in this kind of conflict because on the one hand, we talk about, a lot of transparency and auditability and perhaps data immediacy as well in blockchain systems on which digital assets are built. But then we have these quite dramatic real-world examples of this kind of clash between centralized bad actor activity and these systems, and I think that puts us in a more difficult framework because the real failures are clearly in the centralized governance, balance, checks and controls, balances, and perhaps also lack of technical understanding that enables people to get away with things that they really, the bad actor type opportunities, exploit bad actor opportunities. So what can we do to try to minimize that sort of activity in these systems and try to rebuild trust? I think there's a lot of discussion around regulation, and I'm not going to go into that because we've had a number of panels touching on what is perhaps needed now from the regulatory community to ensure that the activities in this sector are channeled in the right direction and are managed and monitored, and that compliance and regulation that sits around that does what it needs to do. But I think also, internally, in all of our worlds, we need to be working on this technical understanding and education piece, ensuring that the right type of information is made available and that the people receiving it who are there to monitor and understand what's being delivered, especially when you're looking at, I suppose, sustainability applications. Some of these use cases are perhaps remote scenarios, emerging markets type scenarios that are more difficult to build trust around. So there's a lot of promise in the data capacity of these systems, but really working on how we build the right governance, the right reporting, and the right structures legally, but also technically, and it's a co-creation, and I think that is the key of where a lot of this so far has been able to fall down, is the lack of correct sort of integration in that co-creation. So it's not a fully legal angle, and I don't think that regulation and compliance is at all like a solve all. It's integration between technology, education, and then that legal, regulatory, compliance, governance piece.
Thanks. Actually, Brooks, I wanted to bring you to maybe react to this and see if you agree that in order to rebuild trust in the system, that there are certain consumer protections that need to be put in place. And when Jorn talked about sort of the three priorities in terms of identity, the assets, and the consumer protection, would you rank them similarly? Would you prioritize sort of the focus on trust rebuilding in a different way?
Absolutely. I think it's a great framework and setup. I think everything we've done by building this cross-border financial services payment network has been and had to been built on trust in these elements. One of our first use cases on RippleNet, the network, was the remittance business. And for a Saudi oil worker to send their entire paycheck across our network to be paid out in the Philippines and then delivered to a village counts on our partners on both sides of that network with our technology in the middle. And we have a fiduciary responsibility to make sure that anyone on RippleNet or any market we're operating in is absolutely up to the highest standards, which means we absolutely have firm lines in the sand about any markets that are under sanctions or anything along those lines. And so I think you've got to do that, and you've got to stay with it, and you've got to stay with it through all these ups and downs that we're going through as an industry, and just be super consistent with that as your North Star. And so I wouldn't disagree with that framework at all, and it's really how we've had to build it. The minute you have a bad actor on your network or a market that you haven't fully vetted, and something goes wrong, you can watch your volumes decrease immediately because the whole trust breaks down in that. And I would like to echo, Jorn said something I think that's really important about this. We're all kind of dealing with the blowback for the last 6 months or 8 months on some of these issues, whether or not it's Three Arrows or the FTX situation. And many of these are unrelated to some of the kind of underlying building and good that's being done. It's just getting the noise in the way of the real signal of what we're all trying to do. And so exchanges and trading are exciting. They're an important part of the ecosystem, but they're one element. And you could argue there were far too many crypto exchanges to begin with in the beginning. And like every other financial market, the consolidation will happen and exchanges will go away or be merged. And so some of that is natural early stage of this, but it's not what this panel is kind of up to.
So maybe piggybacking on that, on the positives, right? Because it's so easy for us to dwell on all the deficiencies of the system. I think one of the many central use cases of the system is to promote financial inclusion, as we look sort of broader picture from sustainable development goals. So maybe again, just sticking with you for a second, and then I'll want to ask the other elements of that question to the rest of the panel. Talk to us a little bit about how Ripple focuses through its work on promoting financial inclusion.
I think it's at the core. I mean, I had life experience living in India for many years, building a business there in the financial services space. And there was during that time that the identity program and identity card program went on to be able to kind of get digital capabilities out to that vast population. And I think while we're certainly not capable of doing something like that in our own network now, we are partnering on both sides of our network, both the senders and obviously the receiving partners, with organizations that are thinking hard about how you actually get value out to the furthest reaches of a society or a country for a cost level that's competitive, if not much cheaper than it is now. Remember, remittance money was 7% money across border. That was crazy for what we can actually do from a technology standpoint. And you layer into small businesses and trade flows, similar pain points, similar friction in the financial system. So we want to stay after that and always have that as how do we get more people running small businesses or more people sending money across border to be able to do that more reliably, faster, and cheaper. So as long as we focus on that and get better all the time, this noise will continue, but ultimately there is a financial inclusion impact, which is real.
And who are some of the partners that, I don't know if you wanted to spotlight some of the organizations in your ecosystem that are doing innovative work that's in the financial inclusion space?
Well, we like to believe that, we have both. This is actually an interesting part about being in Davos, and I do have a tie on today, but it's a green tie, apropos for this discussion. Because we deal on our network with both traditional financial services players, banks that may be a little bit digital asset kind of wary in the initial days, and innovative players on the financial services front that are out there in any given market. And so, we have hundreds of partners, is the answer to your question, all of whom need to share that characteristic of believing in what we're trying to do and doing their part to deliver it.
Yeah, and I was actually getting at that because I think when you look at partnerships so often, and it's manifested best in Davos when you really look at sort of multi-stakeholder coalition that can help advance those critical issues. And I think organizations large and small, from a multilateral standpoint, but also from private to private, can really be partners on that journey. Jorn, I want to come to you because you obviously were the MasterCard corporate head, but MasterCard Center for Inclusive Growth is doing truly innovative work when it comes to digital inclusion. So, what are your take on what this means from your multiple hats standpoint at MasterCard, sorry.
Yeah. So indeed, so financial inclusion has been for us a real important thrust over now a decade. We've brought 500 million people into the financial system and have now committed another 500 million. It's extremely important because people who are stuck in the cash economy cannot actually climb their financial and social ladder because they have no access to credit, they have no identity, often a lot. It is true that remittances is an important source of funds coming in for these people, but it is a dramatic shortcut to think that blockchain solves for financial inclusion. There's many aspects that need to come together for financial inclusion, starting with identity. A person who doesn't have an identity in a failed state or is somewhere in Mozambique won't be able to actually get access to funds, and so that is a problem to solve. User experience. I mean, it's a quite leap for that lady in a village in Mozambique to actually get a crypto wallet, and so thinking that that's the first hurdle, I think is a bit naive. It's digital access for that person that comes way before crypto, right? So I think we all need to help tackling that because it's an extremely important piece of ESG overall. I do believe blockchain has a role to play and can facilitate cross-border, and that's actually what I still believe is probably the first and most imminent use case for us to work on. But let's not forget it's one piece of a fairly complex puzzle, and not the shortcut that everybody now says, oh well, now we're fixing financial inclusion. I still think it is an important piece, and once again, if you can improve cost, improve speed, while at the same time solve for identity, solve for compliance, I think we'll get there and we'll make progress.
Thanks. So Thomas, we don't have a regulator with us on the panel, but I'm going to, I think, appeal to your previous background and quote Jerome Powell in the U.S. who said that the U.S. Federal Reserve cannot serve as a climate policymaker when it comes to the global financial system. And so much of I guess conversation centers around the energy use and the sustainability from that angle, but I think there is a bit of a disconnect on the regulatory front. So while there is a lot of promise, I think seeing that reflected in laws and regulations that would enable that, I think is still somewhat lacking. So heads up, Brooks, to you that I'm going to come to you with also a similar question, but would love, I guess, a quasi-regulatory perspective here.
Maybe first a comment on what he said. Well, that's clear. He has to do what he has been elected for. If you compare that, for example, to the European Union or the Bank of England, that's a totally different game here because they are stepping into policy making for climate. So I think it's a little bit hard to compare that. But however, if it comes to regulation, I think it's very important. If we are here in Switzerland, and Switzerland has been very progressive in terms of regulation when it comes to blockchain and everything. So we're really at the forefront. So I can say, at least from my head as a Swiss, that this land here was really good for developing such new solutions. If you look at other countries, this might look a little bit different, and that is exactly, I think, a little bit the difficult situation in that we are in. That if you compare it across jurisdictions, it looks different everywhere. And as these solutions are global, we have to at least come to a little bit of harmonization across countries, which I think is currently happening also in G7, G20 and other forums. However, there is always this trilemma if you look at innovation and regulation when it comes to finance. There is kind of market integrity that you have to be in, but there is also rule simplicity, and this trilemma can't go. In most cases, you can only fulfill two of three, and that's a challenge here. So for Switzerland, again, what we did here is we outlined an action plan here for green fintech last year, and it comprises some really interesting things. So the first one was easy access to all kind of data that is around. That can be government data, that can be corporate data. So giving startups especially access to these data is one of the crucial points. The other one is fostering startups in that field. That is also very important here, as the corporates that we discussed this also in the previous panel. are often struggling with being innovative. So easing access to capital was a third point, and also booster the innovation ecosystem in that field with education and research development grants and things like that. So we did that in an action plan which comprises 70 action points, and they laid it out, and this is now being implemented, and I think that's a very good starting point here.
Thanks for that. Brooks, back to you. I think Ripple also has been really at the forefront of the energy efficiency use, and I know you planning different announcements also here in Davos. So what your perspective on what's needed to truly advance that further, and what Ripple is doing in that space?
Absolutely. I mean, I think one of the important things, just to pick up on the regulatory piece and tie it there is kind of it's on us as an industry now, especially after the last 6 months, to be in any jurisdiction, and we, like everyone else, this panel, operate in multiple countries around the world. But if we think for a minute that regulators are just going to understand what we're doing and take it at face value, versus kind of going in, building relationships, showing them how these technologies, these products actually impact the citizens at the furthest out level to this point. And so there is telling people about what we're doing and why we're doing it. And then the how piece of it, I think, is really where your question's going, is at the core of any company, you've got to have true belief that if this is important to you, the sustainability piece, it's got to be there from the beginning. And as I mentioned, our ledger itself, the XRP Ledger, was there from the very beginning with these goals in mind. It was prescient in that sense. And we're trying to act and we're a small company, 800 people. We do have a global presence, but we can only do so much. But every day, when we think about the opportunities, especially around climate, because that's a topic today and relevant right now, what can we do there? We think our blockchain technology is interesting. We have some capital that we can help fund innovation on that blockchain. And there's markets like the carbon credit markets where we see some similarities to some of the inefficiencies, regulatory issues, Wild West nature that crypto has seen. We could bring some of our learnings, as humble as we are about that, to that. And if we all do that as an industry, we'll make some progress here, but we got to lock arms and move together now.
Great. I'm going to open this up for 3 questions because I think we're running a little tight on time, and I will come back to you on sort of a broader macro question, wrapping this up and where this is all going. Any? Okay, going once, going twice. A very timid audience. So I'll give you one more opportunity to think of one. But
So 2023, the macro environment looks pretty downbeat for the most part, given different metrics. What do you see if you're going to look at upside? What could surprise us to the upside, and in the context of what you are building and growing? Give us something rosy.
So, Bryony, starting with you.
Yeah, so I wanted to bring in, I think, this sustainable investment or investment for sustainable development goals, impact investing. Because I think there's real excitement around this maturing in blended finance, extending the understanding through, and the networks between the commercial space, the TFI space, and then also with the charitable space, given what some of the necessary outcomes are to those projects. And the blockchain use cases for coordinating on blended finance and on that risk mitigated capital deployment are just, I mean, they just scream at me, you know, please use blockchain for this. And so the fact that that blended finance piece is being brought like into direct interaction with tokenized securities, tokenized debt, tokenized assets, and then blockchain kind of funding platforms, I think that has huge potential and is definitely growing, not shrinking.
Great. Joran?
So our perspective. So firstly, our perspective is that the base case for what blockchain and crypto can bring in terms of solving real-world problems hasn't changed, right, compared to same time last year. And so we continue to invest the same way and following our investment plans. Now, a little cheaper and easier to recruit, but we continue on the same vein because I think the base case is still there. I think what we'll see this year is actually regulation coming in, which is hugely helpful. We need that regulation, and we need ultimately financial services to come on board. And I feel very good about that. Will we see massive business application scale this year? Not so sure. I am much more excited about our core business continuing to grow its acceptance and its growth. But again, the base case hasn't changed for us. We continue to invest. Regulation is our friend, and like in previous crises, including 2008 and all that, some of the bad practices are being rooted out, which will bring a new dawn, and I'm truly convinced of that. But we'll have to be a bit patient, and those foundations need and the trust deficiency needs to be resolved.
Thomas?
Yeah, so over the past years, we've been looking at startups specifically and what they are doing. And what we observed, surprisingly, was that 83% of them only work on more incremental solutions. So only a few of them really focus on really disruptive ones. And I expect that over the next few years that we will see some really disruptive solutions in that space. However, this might take some time. And stay tuned. This year in April, we will launch our new center for global sustainable digital finance together with Stanford. And I hope that we will then accelerate some of those.
And Brooks,
Fantastic.
last but not least.
I definitely appreciate the question and ending on a positive note, because what we have found is there has been an enormous amount of positive things that have happened during 2022 specifically. And I'll give you one. There was a period 18 months ago where with our on-demand liquidity product, which uses digital asset as the bridge currency to pay out in these markets, you could only do that in 3 markets. Today, we can do that in 40. And that's over the same period where there's a lot of bad noise in the market. And so we've just got to stay at this. And so what do we want in 2023? We'd love the continuation of regulatory clarity in markets where we don't have it. We have that, and we work towards that. We can move quickly. And for me, this feels... Jorn mentioned 2008. I go back to kind of a 2001, 2002 situation, Internet 1, where, yes, there was a lot of carnage and a lot of companies didn't make it, but there was an incredible amount of building going on underneath, and the emergence out of that was accelerating and exciting.
So to end on this really positive note, I think we can be looking positively ahead for more regulation, and regulation really being at the source of fixing the trust in the system. I think we can be looking at innovative approaches and new voices from the startup ecosystem, and not forgetting the true north, which is really the social impact, applicability, and implication of what decentralized assets and finance can represent. So I wanted to thank my exceptional panel and all of you, and Sandra and GBC.
Well, and thank you, Anna.